Embracer is going away. Company splitting into 3, all with new names. Okay, what does that mean? So Lars, the Embracer Group CEO, has announced Embracer Group is splitting itself into 3 separate entities: Asmodee Group, Coffee Stain and Friends, and Middle-earth Enterprises and Friends. Each new company will have its own leadership team strategy, P&L, and ticker on the NASDAQ Stockholm. The Embracer Group name is being sunset. So Embracer Group, which we've talked about a lot, it's a massive gaming conglomerate, ended 2023 with a debt of $1.5 billion. That's a lot of debt for a game company, a lot of debt. They sold 2 big segments of their business, the Saber Interactive for $205 million and Gearbox, another big portion of their game portfolio, for $460 million, which wiped out a bunch of their debt. But they still have an excess of $960 million in debt today. So what are they doing with this? There's one segment of the overall company, Asmodee, which is their physical games group. And if you've played any physical game, Catan, Seven Wonders, any of the like sort of big Euro games, they're basically all owned by the same Twilight Imperium. And so then there's basically a ton of the games, physical board games that exist and sell through on the shelves are owned by this group. And so they're taking most of the debt, of the $900 million of debt, and putting it in this one company, which has a strong recurring cash flow business. And then they are basically spinning out the rest of the companies into 2 distinct business entities. Coffee Stain and Friends, they're calling them Coffee Stain and Friends, will encompass the Indian AA games, and Middle-earth will focus on AAA. And combined, the company has over 900 IPs. And so there's still a ton of potential upside here, but they're doing some clever financial maneuvering to take the debt, leverage it onto their recurring cash flow business, and then say, all right, you guys are kind of unstraddled from your debt. Go build a strong financial business here. There's a lot there, but there's some really, really, really funny quotes from Lars that I want to read. Here's a quote from Lars about debt. Quote, "The financial market doesn't like volatility of AAA games. I don't think AAA games should carry a lot of debt, if any. You could argue that mobile and recurring revenue is a gaming business that could carry some debt, but capital markets don't like to provide that debt. So I think you should have very low, if any, debt within digital games marketing over time." Okay. There's a lot there, Warren. Choose your own adventure. Where do you want to start?
Yeah, well, I'm looking at the article and another quote in here. He also said, "The banks love Asmodee. They know the company has been highly leveraged on their private equity ownership for more than a decade. That amount is basically paying down their debt, not all, but most of the debt in the remaining Embracer Group, meaning Coffee Stain and Friends, Middle-earth and Friends." Yeah, it sounds like there is some clever financial engineering, like you said. So they're essentially saddling the debt with Asmodee, which is a profitable subset of what they do because it's more palatable to banks to have debt with that entity. It reminds me of when I was young and broke and was always rolling my credit cards. Like I would like get a new credit card and have 12 months, 0% APR, pay a penalty for that and move it over that and be like, oh, I'll figure it out later. It kind of feels like that's what they're doing with Asmodee. They're rolling the debt over to the more profitable entity where they can, continue getting funding for that if needed and kind of cleaning the slate for the digital games divisions. Do I have my read of that right, Xander?
Yeah, so, and that's basically my understanding as well. Asmodee, importantly, has a very strong recurring revenue. People buy Catan expansions, right? People buy Seven Wonders expansions. People buy Dominion expansions. It is just a much safer, more sound business, one that the banks can value, and they're happy to just let that crank for another 20 years and sort of clean the debt. The thing that's not said, which is fairly obvious, is that the other segments of the business must not be making strong recurring revenue, right? Because otherwise they'd be able to harvest, be able to take on some of this debt. And so they're talented studios, a lot of talented studios, but maybe not massive games right now.
If they need to raise for these other entities, now being able to raise with little or no debt can be a lot more appealing, right?
Yeah, totally. There's another funny quote. The CEO admits that taking on debt for all the acquisitions was a mistake in hindsight. He said it's not a good trade. And here's a quote. "The public market are very cynical, and my learning is they only believe in execution." Good to know. Yeah, I assume that as well. So talk a little bit what happened to get us here. Remember, this was part of the zero interest rate phenomenon, right? So we had over the last 20 years, 10 years, 15 years, borrowing money was basically free. Game companies were trading as a higher valuation in the public markets than one of the private markets. So several of these companies out of Sweden sort of wrapped up all these small private market companies and then pushed them into the public markets and arbitraged the price to earnings ratio. But importantly, they didn't actually build scaled consolidated infrastructure, which allows them to get leverage on the business. And they had what they called the federated states gaming model. And I think this might be a admission that strategy just doesn't work, except if you can borrow money to do inorganic growth. Do you agree? Don't agree, Warren? How do you feel?
I partially agree. So I think that there was a lot of fervor around this strategy for exactly the reason you mentioned. There is arbitrage play in taking gaming companies public with the public market appetite versus the valuation on the private market. I am not as much a believer. I mean, I think like saying like federated states don't work is kind of like saying game publishing doesn't work. I think we've seen early formative versions of this, and they will continue to iterate on this model, and there's going to be good versions and bad versions. The thing that I always harp on with these models is they are not looking for the right opportunities to centralize resources.
Right.
You can't just bundle a bunch of game companies together and assume that it's going to somehow function better as an entity. You need to take notes. What did we learn from publishing? Like there's certain things that are good to centralize and take off of the game developers' plates. Like get the world's 20 best UA people, get the world's 10 best creative directors. Like you can then have a large portfolio where you can do a lot of testing on all the games you're launching, and whatever looks like it's got juice and can be a hit game. Okay, cool. We have the world's best team in-house for that. We're paying the best rates on the market because we have this awesome portfolio to pull from, and invest in tech for scaling the games. It's like I'm kind of just repeating like the thesis for building Upptic, but like these companies raised enough that they could have built their own or acquired companies that did this. So that's the oversight, or hired us. But yeah, trying to be neutral and not shill us too much. Like the play, I think, was so short-sighted of acquire a game company because valuation in public market is higher. So all the deals were around game companies. There was no sexiness around kind of these scaling infrastructures around growth that are needed, because now that the dust is settled, it's like, hey, where's the growth in the business? Where's the profit? There was no plan in place. There's no infrastructure in place for that.
Well, there was inorganic growth, right? Acquire new companies to make the top line look higher. That was the plan.
Right, which at the end of the day is just another form of financial engineering. So It's not that it's not a valid play to make, but at some point, to the quote about the market being cynical and wanting execution, yeah, of course. Like at some point, you have to turn it into a functional, profitable business. And so I think like some of these groups, to be clear, there's super smart people. We have friends at Embracer Group. Yep. It's easy to be a backseat driver here. But I think what we can say is with hindsight, the mix of investments for some of these federated states, for these early big players like Embracer, they had to learn a few things. Like the investment mix was not optimal. It was too heavy on games and IP and too light on resources to actually transform this collective entity into a profitable business that the market recognizes. So we can get by on hopes and dreams in the stock market for a little while, but eventually, especially when the economy gets worse, we have to show that there's a path to profitable businesses. Anyway, I'll end my rant there. Embracer Group. So in summary, I don't think the federated states model is doomed. I think Embracer Group had to walk so someone in the future can run.
Well, and to your point, I think that I don't know the nuances of their financial situation, but it seems like this is a pretty smart strategy, right?
It's smart for them. They're hitting the reset button, right?
Yeah, and they sold off the stuff to get some cash. They have a cash flow machine now, which is going to be basically tied up, but it's a solid, stable business. They have these two crazy shots on goal with incredible IP and tons of studios. So good for them. I hope that it all does well. And you should hire Upptic to help with the strategy.
I have one more prediction to throw out.
Great.
I don't know if it's intentional or not. I'm going to make a small call here that at some point in the coming years, we will see a meme stock rally on Middle-earth and Friends.
Huh. All right, get in. Well, Todd, I think it's not spun out yet, but that's the reason, or just because.
When I saw the name of the entity, that's the first thing that popped into my head. Is like, this is something that like Wall Street Bets is going to latch onto, and there's going to be some sort of like ape pump of Frodo and Bilbo.
You can see the memes already. Well, let me just ran a new parade, and let me tell you that those companies are being renamed before they go to public market.
Okay. All right. I don't know if this call is going to pan out.
That's it. That's the show.
All right. Thanks for joining us, everyone. A lot going on in the industry this week. We're here to keep you up to date. As always, the podcast was brought to you not just by me and Xander, but by the whole team here at Upptic. Here at Upptic, you probably picked up on this, but we do games growth stuff. So we build really awesome software to streamline and automate the games growth marketing process. And then we get to do growth marketing on some of the world's best and coolest games across sectors around mobile, PC, Web3. If you're making a badass game, we are nerds. We love games. We'd love to talk to you, and maybe we can even help you. Who knows? So feel free to reach out to us through our website. That's upptic.com. It's upptic.com.
Talk soon.